Hello, everybody, and welcome to Mitiga Solutions' first webinar of 2025. I know it's only just turned 4 o'clock, so we'll wait a minute or two for people to join in and start understanding a bit more about their climate risk needs and listening in to myself and my very special guest who joins us here today. Just as a bit of admin before we do get going, you do have the capability to ask us questions via the chat. Please feel free to do so, because at the end, with the last 10-15 minutes or so, depending on how long our conversation lasts, you will have the opportunity to ask us any question and we will answer them. So if that's anything to do with Mitiga Solutions or its premier product EarthScan, or indeed if that's anything to do with Fernando or Azora Capital, please feel free to ask us along the way. That was a bit of a tease, but yes, my name's Jonathan Liddell. I am the head of customer operations here at Mitiga Solutions, and my job is to make sure that all of our customers get the most out of all of the data and insight that we provide. And I'm really glad to be joined today by my good friend Fernando Gomez. Fernando, would you like to introduce yourself?
Thanks, John. Very happy to be here. Thank you for having me. As you said, my name is Fernando Gomez Fortune. I am an investment director at Azora Capital. Azora Capital is an independent alternative asset manager with around 15 billion in AUM. We invest across the US and Europe primarily, and we are a real assets investor. So we invest mostly in real estate, infrastructure, and private equity strategies, but around the built environment and real asset sector. So thanks again for having me. I'm very happy to be here.
Not a problem at all. So as today's title suggests, we're going to be talking about climate risk and how it affects investment decisions in the real estate sector. And that's why we've invited Fernando from Azora Capital onto today's call. So Fernando, I'm going to start you off with an easy question, and they may get more difficult as we go ahead. But just to warm up, I'd love to understand, and I'm sure the crowd would too, how did you get into sustainability, and why does Azora Capital in particular prioritize it?
Yeah, so I think, it depends on how anyone defines sustainability, which I think is a term that is certainly in flux. I was always intrigued by the natural world. And when I was, I've always been in finance, but I think, real assets, agriculture, real estate, the way man-made assets interacts with the natural world has always been fascinating to me. I think, Azora Capital, I think, we've been around for 20 years, and I think everything we've done since inception has really been what would be potentially considered today sustainable investments in a way. Our slogan has always been to invest in a better future for people. And by definition, that is sustainability. We invest in real assets for the real world for, long-term sustainable value. So, from the beginning of our time at Azora, I think, we're very well known for residential investments. And we were, I think, one of the first investors in Europe to invest in residential for rent, which back in 2002, 2003 wasn't really an asset class. And, in a way that was already a sustainable investment, because we were realizing how people, thoughts were changing about home ownership, and the fact that people would move around more than they did in the prior generation. And so residential for rent became kind of what is now, I think, one of the largest living asset classes. Then we started investing in hotels and then, basically thinking about how people spend their time and their money in their leisurely activities. And that ultimately expanded into senior living and student housing and logistic assets and office and retail and whatnot. And then ultimately in infrastructure, and especially renewable energy infrastructure, and private equity strategies around sustainability themes. So I think Azora's, personality and the culture within the firm, and I think our brand is very much associated with sustainability in the broadest sense possible, which is long-term value and sustainable equalizing profitability, because nothing, I think, is sustainable without profitability. And I think that's, how we like to at least define ourselves.
No, absolutely. As John Elkington would say, the triple bottom line, we've all got to achieve that, and a win-win-win scenario. I think, it's one of the reasons why Mitiga exists, is to help organizations understand the impact of climate change and what the issues will be for them going forward into the future. So what I'd love to do a bit of a deeper dive into is around that climate risk piece and real estate. So what I guess I would love to understand is how, in your opinion, what does climate risk mean to the real estate sector in general, but also to Azora Capital?
Yeah, I think climate risk has meant different things over time to the real estate sector. I would now, at least for me in particular, climate risk and climate value are kind of the same, two sides to the same coin. I think on the one hand, it's important to note that, real estate and the built environment is the culprit of a lot of the climate changes. We are, as a sector, is responsible for, I think, 40% or so of global greenhouse gas emissions. And the majority of those emissions are actually, generated from actually kind of running and operating buildings and real assets. On the other hand, the impact from those greenhouse gas emissions cause weather events, and those weather events impact the physical structure of a property, the appeal of a geographic market, and has a serious impact ultimately on the value of the asset. So I think real estate and climate risk or climate value, I think, are ultimately very much intertwined, and I think that's something that wasn't necessarily apparent or wasn't a focus or a priority, I think, going back a few years. So I think in a way it presents material risks, but it also has very much, very many business opportunities related to it. I think now it is starting to become core to the sector, and it is moving slowly and gradually into the heart of decision making, and it certainly is the case for Azora. Ultimately guiding where you make investments, where you deploy capital, who you raise money from, and what strategies and what value you get at exit. So it's ultimately driving profitability and returns, which is the nature of financial markets and investment strategies. So yeah, I would say that it is a changing meaning, but I think it's becoming more and more apparent. And I think the work that Mitiga and EarthScan is doing is helping people understand that risk in this sector, and also understanding the value associated with their assets and certain new business opportunities to that. And we'll hopefully get into that.
Yeah, no, I think just to reflect back on what you said there, I think like any resident of Los Angeles recently or Valencia a couple of months ago knows the impact that specific weather events, which are made more disastrous by climate change, can have on their owned assets as well as their livelihoods. So I think it's imperative that the real estate sector takes this into consideration. I think with that in mind, have you encountered any specific examples of assets that suffer due to climate change that Azora may have invested in?
For sure. Yeah, for sure. Many cases. I think I can certainly think of several examples across our different investment strategies, but firstly, on the living side, we own and operate a large senior housing portfolio in Europe and specifically in Spain. And I know that, in the case of senior housing and any healthcare related assets, climate change is not just something that is important for the sustainability of the physical building or the physical asset, but it also has major implications for the people in it. And in the residential sector, that's huge. So, in one particular example, actually, we, in the north of Spain, we have a few senior houses that typically didn't get very warm in the summer when we first invested in them, years ago. And in the last couple of years, summers have been getting warmer in that northern part of Spain. And that has meant that because of the potential health risk associated with overheating of those assets, we've had to implement new upgraded climatization equipment to those assets. And, and that's been something that has been caused by just 1 or 2 days in the whole summer of overheating can actually, have significant impact and actually cause, not just illnesses, but even death for people living in it. So that's been one particular example that I can recall. I think more recently in the hospitality segment, we were actually thinking of maybe upgrading certain assets in Greece, hotels that we have in Greece, because it's a specific kind of area in the country which has a lot of seismic activity, and so that has led us to potentially think about moving an asset from one location to a different location.
Yeah.
We've had similar experiences in our energy infrastructure investment strategies and asset management, where we have a solar park in Texas where flooding has become more prevalent where it didn't used to be at all, and so we are no longer able to make investments in that area and have decided to change the location. And that's the case across various of all of our strategies. I would say climate is highly impactful, and climate change in particular is becoming not just prevalent, it's also becoming more frequent, and that has an impact on all asset management and certainly new investment opportunities and new investment decisions.
Yeah, I can imagine that for your solar farm in Texas, as that example with flooding as well, these are the sorts of assets and infrastructure that for return of investment will take decades,
for sure,
long-term life. And, who knows what climate change will wreak within 20, 25 years' time. I think with that in mind as well, we've got a question here around insurance premiums affecting the real estate sector. Is this something as well that Azora has experienced?
Yes, for sure. I think building new assets and managing assets, and given we are a vertically integrated platform, we do all the property management for most of our own assets and even third-party assets, and that is core, right? I mean, insurance, tax, financing, all of these things are core to the sustainability of the project and sustainability of our investments. So rising insurance premiums is certainly a major thing. And you mentioned the West Coast of the U.S. I mean, we don't have any assets there at the moment, but I know for a fact that insurers are struggling to, to provide insurance for home dwellers in the West Coast, not just from, the recent fires, but even beyond that because of the energy crisis and flooding and whatnot. So it has an impact. And in the case of Azora, I think we've certainly seen it recently, actually this year, because of more kind of torrential rainfall and very high winds in a particular area for one of our other senior housing assets. We've experienced some damage in kind of the waterproofing of certain roofs, and that meant that the insurers have had to, pay for that damage, and therefore that has, ultimately had an impact on our new premiums for 2025 and beyond.
I can imagine, yeah.
So yeah, I think that's happened before. Even, and I mentioned some of the flooding risk in our hotel, or some of the other weather events in our hotel assets. I think that's also been an issue. We've had rising insurance premiums for some of our Portuguese hotels and other Mediterranean areas where flooding has become more prevalent, and we've seen that happen. And I think last year or a couple of years ago, we had some flooding in a restaurant at one of our hotels. Ultimately, led to kind of $100,000 expense, cash outflow, and that meant that the next year we had an increased premium. So it is transversal and prevalent across the board in our business.
And I think if that's the case, then it should become an integral part of the entire business structure, right?
For sure. Yeah, I think climate risk has kind of been a bit of siloed and the kind of sidelined historically. I think now, and certainly for Azora, it is at the heart of decision making, and so it starts with the investment teams for any new investments. They incorporate it in due diligence like you would any other risk, and you would think about legal compliance or demand risk or anything like that. I think now climate risk is at the heart of decision making there. In the ongoing management and operations of the assets, to access new financing or cheap financing, to ensure that the quality of the people living in a residential building or tourists visiting a hotel or whatever is premium, then you need to think about how it is shielded from climate events or is able to weather specific extreme climate events. And even I think as you sell an asset, as you think about increasing the value of that asset, I think having ability to kind of incorporate climate value in a way into that, or green premiums, whatever you want to call it, I think is important. So it used to be, I think, more siloed, and it's slowly crept into every single part of the organization. And now it's about really, and how we do it at Azora is kind of bringing that all together and making sure that it is a centralized part of the organization. It is transversal to every element, and then decision making and risk management and costs are ultimately made more efficient if you ultimately are able to centralize it and escalate it into all the governance structures to the top of the organization. So that is what we do here at Azora, and I think is hopefully the right way to approach it for the future for every organization.
No, I've certainly worked with a fair amount of investment and asset managers, and this is the model that I've always suggested works best, is if everybody gets an understanding of what climate change could potentially do to their investments, then everybody has a stake in the usefulness of the data, right? And so making sure that you can do something about it. I think from our sides, as we're talking about investors as well, when you're evaluating companies for potential investment, do you assess for climate risk strategies or potential sustainability initiatives?
100%. I mean, it depends on the strategy, obviously, but I would say generally, yes. In some cases, it's more important depending on the strategy than others. But yes, it is certainly part of the decision making. I think, for our private equity climate solution strategy at Azora, for example, we, by nature, what that fund intends to do is actually identify leading businesses that offer climate solutions for the built environment, with the idea that, the fact that we are in the mix and in the industry and we own and operate a lot of assets, we will, one, access the right opportunities, but two, we can actually help these companies grow within our own portfolio of assets. And so those are things that we look at for sure. And it actually, it leverages a lot of the connectivity that we have within our own organization, whether our hotel team is looking at a, solar self-consumption solution, or whether our logistics team is looking at a new installation, or, our residential assets are looking at, a technology solution for climate adaptation of a specific senior living or student housing. I think it's very important to look at the sustainability strategies. And even beyond that, we have certain strategies that try to identify companies or assets or industries that may not have top tier programs, and we actually create value by bringing them up to a very sustainable place, if you will, and actually kind of upgrading their sustainability initiatives. And that has a lot of value, and it generates profitability for our investors.
No, I think it's really important that sustainability and profitability go hand in hand. And it's amazing that more and more businesses like Azora are taking this into consideration when it comes to investment, and as using it as part of the due diligence process. I'm just curious, for any potential people wondering who are listening in, what tools and processes do you recommend?
Yeah, I think it can be overwhelming. I think sustainability and climate risk, and there's a myriad of regulations. It's a myriad of kind of acronyms, and it's guidelines and whatnot. So I understand it's overwhelming. And my advice is, kind of forget mandatory, voluntary disclosure benchmarks. I think it's important to, first of all, dedicate resources to understanding the issue that affects you in particular and your particular strategy or your business. Two, I think dedicating time and people to then, being able to transform or process that data and that information into something that actually creates value. And then, taking action on that information. And I think having tools like EarthScan by Mitiga, I think is a great example of that, right? I think, the interface and the technology that you guys offer is, very, very important. And I would say almost essential for not just real estate sector, but a lot of other sectors that are affected by a climate risk. And I think leaning on experts and existing technology tools, and not trying to necessarily take it all internally, I think initially at least, is the right way to approach it. And there's, I think, a lot of solutions out there that can help people understand their problem first, and then how to take action to solve that problem second.
No, I completely agree. I mean, understanding the problem is half the battle often in sustainability.
100%.
And I think what you said there about regulatory and disclosure frameworks, I think, it does impact the real estate sector. I was just wondering, do you see these as a burden or as like a value add? I think I've got a bit of an understanding from what you just shared there, but I'm curious.
Yeah, no, I think as a whole, I think generally speaking, it can be a burden, and I think people initially think about it as, oh wow, what do I have to do to just get through the next whatever the next cycle or this year's reporting disclosures or whatever. But I think once you kind of are, that typically is I think an issue when you don't really fully understand the risk and therefore the value associated with that. Once you understand it better, and having data is the first aspect of understanding it better, then you can actually start to see the pockets of value, and you don't necessarily think about disclosure or frameworks or mandatory regulations. That's something that is a burden or a cost center or anything like that. You can actually see it as a way to be more competitive, as a pocket of value, as how you differentiate from your competitors. And we'll get on to communication, I think, but communication is a big part of that. So I think traditionally it's been seen as a burden. I think slowly it is now being more understood as a potential opportunity and a pocket of value creation.
No, I certainly agree. I think it's potentially a bit of a chicken and the egg scenario when it comes to regulatory frameworks. Which one comes first? Doesn't matter. You've got to get on the path.
Exactly.
And understand what you can. I think the next question is a bit less focused on regulation, I guess. But I think from my side, we're talking about sustainability initiatives and obviously some of the impacts that climate change have had. I was just wondering, how do you think these sustainability initiatives can drive ROI in real estate investments?
Yeah, that's a great question. I think, people have been talking about this green premium for a while, and it's hard to see. I think historically it has been hard to see data on that. And I think now we're approaching a time where it's been tracked more than it has been in the past. And therefore, technology that is available and affordable today associated with sustainability is more prevalent. I think investing in financially neutral or even financially positive tools, technology, and services today is something that I think is very common. I mean, we're thinking about energy efficiency, solar self-consumption, batteries, heat pumps. This is something that just makes financial sense. And with very much existing technology, I think with you can abate almost 60% of the operational carbon emissions of an asset, and therefore make it sustainable for the future. So we're seeing we've used this data even in a lot of our pitches, up to 10 to 15 to 20% increase in rents from decarbonizing your assets, up to 15, even 20% in certain markets, increase in sale prices. You're generating more demand from tenants if you can offer a sustainable asset that is, able to weather different climate events and therefore make your comfort level internally much, much higher. It is, I think, easily identifiable today. And it is certainly something that we do at Azora. We look at any CapEx investment or any capital expenditure as something that needs to generate ROI. And again, this goes back to what you were saying about sustainability, meaning profitability. I think that is, we don't necessarily need to look at, the most disruptive, the latest and greatest technology. The technology exists today, and it's about, breaking down barriers for adoption to making sure that, I think it's more used or more prevalently adopted.
No, definitely the technology exists today. I work for a company which helps provide that technology to people, right? So this is the reason why we're here. I think you highlighted earlier as well the need for good communication. So how do you communicate these climate risks to stakeholders like investors?
Yeah, in our case, I think it is driven by investors. I mean, we do voluntary and mandatory disclosures and whatnot, but our investors have been pioneers in this sense, and I think Azora has always been associated with those type of investors. So, from our perspective, a lot of what we do and a lot of what goes, I think, above and beyond regulatory or mandatory mandates is actually driven by our LP community. And so we do, quarterly and annual reporting to our investors, depending on the strategy, about some things that they care about. I think it's important for everyone to understand what drives value for their own investors or their stakeholders in general. In our case, there are specific certifications that we use that, I think are pretty much a standard in the market that I think allows our investors to really track progress, to really see the value of their investments increase over time through specific sustainability initiatives that we manage and that we undertake. And then, of course, our board of directors, just from a general kind of good governance perspective, has access to all of what we see and what we do from a sustainability perspective. I'm actually a member of our global sustainability committee, and therefore, I have a really good insight into all the different actions taking place, the progress, the increase in our ratings, and the certifications and green financing opportunities that we have access to because of our actions. So communication is key, because a lot of people, and I was speaking to a partner, just a different example, but I was speaking to a partner in a different firm who was saying, oh, we don't do ESG. And then starts to talk about things that they do. And it's like, well, you actually do a lot of sustainability initiatives. You just don't call it that. And so the communication aspect is actually massive, because they may not even be aware what they're doing is actually sustainability, and that, they're just not able to communicate it appropriately.
No, and I think it's an incredibly positive way of looking at it, as well as the fact that just because someone says that they're not doing ESG doesn't mean that they're actually not doing it. It means that they're, they may not want to be utilizing that name, but
exactly.
Anyway, the next question we've got here is around some of the challenges around that, and I think we have a question actually from the chat there as well around some of the challenges and how you implement climate risks with key stakeholders. I think we can touch upon one aspect, probably a little bit easier. That's around like how you highlight the monetary value of these types of tools that you use, both internally and externally.
That is super important, I think, and it is a struggle. I think even today we struggle, internally at Azora, and I think in a lot of firms, to really highlight that. It is important that comes first, in my opinion. I think, at the end of the day, especially in your real estate investing or you're an asset manager, at the end of the day, you're here to take people's money and put it somewhere that generates value for the ultimate receiver of that, but also for the investors that gave you that opportunity. And I think highlighting monetary value is not always easy, depending on what you're looking at and how to think about the payback, the investment, and all that type of stuff. I think the reality is we need to start incorporating it into our models. I think, if you think about any investment, what is the business opportunity? How do you go about addressing the market? How are you going to generate demand for that? And how is that demand going to become sustainable over time? And we see that now with a lot of the sustainability technologies that we implement. I mean, are you going to be able to generate more demand for a building that is, energy efficient and that is, sustainable across, the different seasons and throughout, the next 20 to 30 years? Yes or no? If you are, then you're going to be able to get more tenants and probably command a higher price for rent there. And people are going to be willing to pay for it. So thinking about paybacks periods, mapping out building exposures, quantifying and portfolio value to that, and then taking action, setting targets and identifying levers and all that type of stuff is really, I think, the way to ultimately drive value and highlight that over time on a like-for-like basis. It's exactly the same as you would with any other value pocket or risk in any financial investment.
Yeah, no, absolutely. And I think like what's really heartening about what you've just said there is that it's very forward thinking, looking forward to the future trends, with which are positive. I think realistically, we all need a bit of that in sustainability and ESG. Sure. We're all aware of how difficult climate change is as a problem globally. But if we can talk and communicate, as you say, better about all of these insights that we're gaining and improving infrastructure, that's no bad thing. I think from our side, like with that future in mind, what I'd love to do is just to ask you a couple of questions about trends and what you see as being the future outlook. So, I would love to understand what trends are you seeing in, well, I mean, let's break it down in decarbonization and climate adaptation in your sector.
Yeah, I think every year there's something new popping up that makes a lot of sense, and I'm I love the dynamic market that we're in, and I'm obviously very excited and always enthusiastic about the sector. But I think from a climate change adaptation, I think services and solutions like EarthScan by Mitiga are going to be super important. I think for real estate investors, operators, managers, infrastructure companies, being able to know where I'm going to deploy my capital, what investments am I going to have to make over the lifetime of my investments to keep it sustainable and profitable, and having tools like Mitiga's, I think, is critical to that. It's ultimately going to drive investment decisions. Should I do it here? Should I do it there? Should I do it in this way? Should I do it in the other way? And I think that's very important. I think we're also seeing a lot of things start to permeate into the technical building codes of specific countries. So, insurance companies are now thinking about, they are usually the spearhead of this industry, because their business is to really look at every single risk to make sure that they can appropriately price premium. So,
of course.
We're hearing it from our own insurance companies in some of our new developments of, you need to take into account, when you're building a terrace in a residential building, it has to be double drainage and this and that, or, you should know that if you're building a solar farm here, you're subjected to potential flooding risk if it goes up to 2 meters, and that probability of that in the next 100 years is X, Y, or Z. Having tools and technologies to do that, I think, is critical. And, at Azora, and specifically in our climate solutions funds, we are highly focused on looking at companies in that segment and supporting them with capital and business to be able to provide more technology, better solutions, and better service to companies. We're also looking at, I think, sustainable building technology, sustainable building materials. All of that, I think, has been somewhat serviced, underrepresented, underfunded. And I think it's an area that we're looking at for the future. And it's very important for the decarbonization and the climate adaptation of the real estate sector. What type of materials are used, how's the insulation, and what can be done to make sure that is there for longer and in a better way. So yeah, those are some of the things that we're looking at, and where I see a big opportunity, and where I hope a lot of the climate capital is going to be kind of be flowing.
Yeah, and I think maybe one more question to end on before we open it up to the Q&A. You've talked a fair bit about insulation and various different material tools and frameworks that could be used. I guess my question is, what actions would you encourage any other potential real estate sustainability focused listener here today? What action would you encourage them to take?
I think first and foremost, read and be informed. I think staying up to, getting up to speed and making sure that you understand what issues affect you the most is important. Then prioritize that, making sure, okay, what is the value at risk, the most here? What is my priority? Quantifying the impact on that, and then ultimately taking action. I think to do all of that, you need to first be able to dedicate resources, actually get people and money involved in that first, and that will allow people to get informed, map exposures, prioritize, and create processes to that. And it's important that people start doing that, or continue to do that, I should say, because I think it's becoming more prevalent. And ultimately, that will drive action. And once you're in the mix of it, and as you said, you need to find your footing first. But once you're in there, you'll be able to find a lot of new opportunities, and that'll be a competitive edge for you versus the rest of the market. So it is in everyone's interest, and as you said, it's a win-win-win. But you need
Absolutely, to that's what we're all aiming for, right?
Exactly.
Well, look, we've had a couple of questions through from the audience, so thank you very much, audience. I'm going to choose these in order of upvotes. We've had a question from Luke Brown. And the question here is, how are you incorporating physical risk data into your investment decision process? So we covered that a little bit, but I guess if you can provide any more nuance for Luke.
Yeah. I mean, it depends on the strategy, but in some it's super critical. Like, for example, we talked about infrastructure and energy infrastructure, knowing where you're going to build a wind farm or a solar farm, because it's just there. It's going to be there, hopefully, for the next 20 to 25 to 30 years. Location is key in that particular aspect. And so if that specific location is subject or can be subject to a lot of rainfall, heavy storms, flooding, it will drive investment decisions. I mean, I know for a fact that, we decided to change locations after we received a report during a due diligence process for an investment of a particular wind farm or a solar farm. That made us change the location because there was a potential flood risk over the next 100 years that was above a threshold that we weren't willing to accept. Beyond that, there's certain elements like, insurance won't, there's, for whatever reason, the insurer won't insure a particular type of asset in a specific location. And so all of that drives our investment decisions. And that is true physical climate risk. So yeah, it depends on the strategy, but I think, wherever location is critical, I think that's, one thing that is probably a go or no go type decision making.
Absolutely. No, I think we've got another question here, which, almost naturally follows on from this. It's about what specific climate risk factors, for example, flooding, heat stress, hurricanes, do you think are most influencing real estate valuations today? And I think from my side, like, if I may, from my experience, I think a lot of the acute risks, so high impact, but things like flooding, things like wildfire, get a lot of influence within not just real estate, but in the media in general. But climate change, we don't measure climate change by how much it will flood. Ordinarily, what we do is by what the temperature increase will be. And I think that highlights the idea that heat stress will be, under our current emissions pathway, one of the specific climate risk factors that we're potentially not looking at with the same level of urgency. I don't know if you'd agree with that.
I agree. I mean, I think it's interesting because climate can have an impact on specific buildings, but it also has impact on whole markets. Like if you think about Miami as a market, as a real estate market, that entire market is subject to, flooding risk, as an example, and hurricane risk. I would agree with you that, on a global basis, heat stress, because, that is ultimately what we're talking about generally when we talk about, climate and over temperatures rising, is going to be super prevalent, and it is today. I think flooding is another one because it's very associated with heat risk. It's ultimately, dependent on, the waters evaporating and therefore creating torrential storms in areas where they didn't used to be. Like what we were talking about in Valencia, or even earlier this year, last year, in Northern Europe. So I wouldn't know what the most impactful is on a global basis, but I would certainly think that heat stress, flooding, are probably the two most prevalent. And they're also the ones that we're seeing, as you said, in the media almost on a monthly or quarterly, unfortunately on an annual basis, in very different pockets of the world, and more frequently.
Yeah, no, unfortunately so. And I think we've got another question here around, I'll just read it out for you. What should sustainability advisory firms focus on when using data from technology platforms to create value for investors and investment companies like Azora?
It's a good question. I think sustainability advisory firms by nature should be thinking about a kind of fulsome solution. So I think, data from technology platforms, I think what is most convenient for firms like Azora is to have technology platforms that actually provide a kind of full 360 type solution, where you're gathering the data, you're creating reporting, and processing that data into something that is digestible and actually informative and generating insights. and then you're able to action on that data, and it's able to kind of give you the tools to actually implement and take action and do the project implementation. So instead of having a myriad of tools, one technology platform for, gathering your CO2 footprint, another one for, evaluating the climate risk of a specific asset in a specific location, and then another one for, ultimately reporting and disclosure. I think if you're able to provide a wholesome solution, like I think, EarthScan and Mitiga does, I think that's something that is going to be very valuable for all asset managers going forward, because it is centralizing everything in one technology platform. And that's what we looked for in the past with, CRMs and IT platforms and everything else. And I think this is just going to be another one of those areas where you're going to want a 360 solution for all of the different problems.
Yeah, no, absolutely. I think as well, like it's getting back to that problem of where do you start? You've got to start somewhere, but if you can get a 360 understanding, then you're onto a winner. I think the next question that we've got here is around how have you seen climate risk factor into underwriting decisions for Azora's real estate assets?
Yeah, I mean, it ultimately translates into value, and the way to do that is, it depends on the type of strategy, but it can either be kind of a white or black, yes or no, like will I do it or will I not type thing. If the risk is unmanageable, if the risk can be manageable, I think it ultimately translates either on discount rates, and that therefore affects pricing, or on something to CapEx investments, and therefore ultimately again affects pricing and value. It can be in different pockets, but I would say generally it's go no go type thing, or then impacting or increasing discount rates, and then otherwise assuming additional CapEx investments, which ultimately will affect pricing and value as well.
And I imagine like we can both see this next question around real estate investment in Florida. So I'll read the question out, but I imagine your answer will be very similar in the sense that would a real estate investor who uses climate risk as a decision KPI shy out of investing in Florida?
No, not at all. Not at all. I think it's on the contrary. I think what you need to do is invest in Florida and invest in climate resilient assets. That is where the value is going to be. And actually being able to do that where there is less of that in that type of market, then you're going to be able to kind of, demand is going to flood your way in a way. So I think that's not at all the kind of ultimate answer. I think the answer is to invest in the right type of asset, or take action to develop certain existing assets and upgrade them to climate resilient assets. That's ultimately the goal.
I think that's a great question to end on as well. I appreciate that we've had a couple more questions come through, but we will endeavour to answer them. We will get them answered for you post this call. One thing I do want to just share with everybody that is this recording will be sent out. And so for all people who've signed up, you'll get a recording of this. Please feel free to listen back to us. And if you do have any further questions, to reach out to either myself or Fernando via LinkedIn or via mitigasolutions.com or Azora Capital. And I think one of the things that I just wanted to mention at the end of this call as well is if you are interested in learning more about how you can start to factor in climate risk into your understanding in the real estate sector, do reach out to feedback@earthscan.com. We'd be more than happy to help. And yeah, I just wanted to thank you, Fernando, for what has been
it's been really awesome.
Great chat. And I have to say, like, not only I think someone in the chat said pragmatic, but enthusiastic, and I couldn't agree more. Like, I think ESG and sustainability surely needs a bit of pragmatism and enthusiasm.
Enthusiasm, indeed. Thank you, John. Thank you very much. It's been a great
chat. And thank you all to the listeners. Bye-bye.
Thank you, everyone. Bye-bye.